And Business Tonight, Singapore's central bank says the country's banking system remains sound and resilient. There has been heightened volatility in global financial markets after the closure of banks like Silicon Valley Bank in the U.S. SVB is the biggest U.S. bank failure since the 2008 financial crisis. And for that reason, regulators everywhere are trying to shore up confidence. MAS says Singapore's banking system has insignificant exposure to failed banks in the U.S. It adds that banks in Singapore are well capitalized and conduct regular stress tests against interest rate and other risks. MAS is working with government agencies to assess the impact on Singapore startups, including those with operations in the US. The central bank says it is also monitoring the domestic financial system closely and stands ready to provide liquidity through its facilities. This is to ensure that the system remains stable and financial markets continue to function in an orderly manner. Well, Thailand's central bank also chimed in, and it said SVB's collapse should have only a limited impact on the country's financial stability. It added that the baht strengthening is in line with regional currencies and that it is likely to stay volatile due to uncertainty over U.S. monetary policy. Well, U.S. regulators, they have unveiled emergency funding measures and closed down a second financial institution, Signature Bank. U.S. President Joe Biden has defended America's banking system. He said quick administrative action should give citizens confidence that the U.S. banking system is safe. U.S. regulators have said Silicon Valley Bank depositors would be fully repaid. Mr. Biden said the money will come from insurance fund fees and no losses will be borne by U.S. taxpayers. He added he will ask Congress to strengthen regulation for banks. So at least one venture capitalist is worried that the fiasco could put a chill on investments, especially into tech startups. It could mean harder to come by capital for growing businesses at a time when the cost of debt has been going up with rising interest rates.
Investors themselves also are evaluating their own portfolio to see if the true impact of that. and therefore, before arresting and understanding the true impact of that, will probably be a bit gun shy in terms of deploying new capital, right? So I think that does add certain uncertainty and destabilize the system a little bit, at least for the short run, as people try to figure out, what is the true impact of this.
Mr. Tan suggests that startups reassure stakeholders that they have limited exposure to these banks in a bid to gain consumer confidence. In the long run, he thinks that investors will still find the region attractive.
We think that Southeast Asia is going to shine, right? Given the demographics, the growth rates, and so on and so forth, and the low rate of digitization, right? And that's why we're still investing in this region. That certainly does help that, we are, as a region, we're more removed from the impacts of SVB, for sure.